the most, the best piece of advice for where an investor should start is metropolitan areas where the absorption of real estate is very, very high. California, Texas, Arizona, populous regions. We call it the PSM, people per square mile. You can find this on the internet, is high density, people per square mile, high absorption rate. So the high absorption rate is how quickly properties are being absorbed from the MLS out into the community and being sought and being bought. So if the absorption of real estate is very high, the PSM, people per square mile, density is very strong, i.e. the Bay Area, San Francisco, Berkeley, Southern California, Phoenix, Scottsdale, Austin, Texas, etc. These are very populous regions with a lot of people, and the absorption rate is very strong. I would advise any investor today to stay to populous areas, geographical, well-known communities where the absorption rate is extremely, extremely strong. We have some new investors that try to pick areas with less dollar points, less acquisition cost. I'm not going to mention the states, perhaps, but they're Midwestern states. Your South Dakota, your Kansas, your states like the Arkansas, whatever. Your states where properties are $100,000 to $150,000. They think that's less risky. That can actually be more risky. You might find the absorption rate there to be very low, not fast, and you're going to find that the demand for housing in that area is very low, and you're going to find that it can actually be more risky. I would rather see an investor purchase, rehab, and resell a house in San Jose for $1.2 million, where the absorption rate is very strong, than I would $145,000 in a back-end community in Arkansas. Very difficult to resell, the demand is not there, and the populace is not there. So my advice to a new investor is stay within a region or a community that is very, very desirable, lots of people, and the absorption rate is very strong.